As the second, third, and fourth derivatives develop, we are just beginning the AI revolution. So let's get the popcorn out. One of the two causes, in my opinion, is the multiplier. I mean, the rest of the tech industry is multiplied by 8 to 10 for every dollar spent on an Nvidia chip. Given that the AI party starts at 1 p.m. and ends at 4 a.m., I believe that trade is now beginning to extend out when you look at enterprise, software, cybersecurity, and other aspects of infrastructure. Benioff and others are now being brought into the celebration behind the velvet ropes. From a deregulatory standpoint, however, the Beltway is paving the ground for what will be a golden age of artificial intelligence. And now, from the standpoint of deregulation, the FTC is just beginning what we believe to be a truly unique start with certain Nvidia, regardless of whether deal-making was involved in the autonomous space. Although the share price has returned to above $140, the second half of the year has been somewhat sluggish in comparison to the first half of the previous year. What do you believe transpired here? Did everything simply take a brief respite? Have a happy holiday season. Being here is wonderful. I appreciate being on today. I mean, Nvidia's potential momentum is at an intriguing period. The demand for their chips increased significantly as the first half of this year approached. As the second half got underway, we began to receive inquiries concerning Blackwell and what the company's future held. The market has begun to focus on the upcoming fiscal year, and where the momentum will start to accelerate into specific quarters, even if the firm guided to several $billion in revenue in the fourth quarter. There is now a great deal of discussion over how Blackwell will begin to shake out and what the actual accelerated trajectory will look like. And for that reason, we have observed that. What possible effects might this have on Blackwell demand? Do you think they're generally good? Is this mostly a predicted apparent demand, or are there many other tail risk outcomes? The predictions vary by more than $100 billion when we look ahead 2 years. Thus, it is evident that there are bulls and bears in the world. Some analysts predict that Blackwell's sales will be at or below $40 billion, and at or beyond $100 billion in the upcoming year. This indicates to me that there may be some stock volatility if the consensus trend is either far above or significantly below those expectations in terms of where the numbers are convergent. Good numbers to be aware of and to keep in mind. Look, we are going to discuss Tesla in this context. Melissa, stay with us. Tom, please join the discussion now, Mr. White. Considering Nvidia's choices and the range it has been in, I believe Melissa is right when she says that it's time to see if all of those orders are fulfilled next year. Everyone forms a line. Is it solely driven by secular demand, or does it fluctuate according to economic events? Nvidia may have been somewhat range-bound because of this. What impact has that range had on the options trade within it? Inferred volatility is, in fact, declining. It is in the bottom 1%, with an IV percentile rank of less than 25%. Really calm down. Yes, that is the result of a surge of more than 3% over the previous 2 sessions. As a result, implied volatility has decreased, and we have witnessed some gains. I examined a directional bias option strategy that capitalizes on decreased implied volatility. Like many of the other Mag 7 stocks that have recently reached their highs, this strategy capitalizes on the possibility of a return to all-time highs if you believe this will rally into earnings, which are scheduled for mid to late February. This makes use of any reacceleration that may occur over the course of the next month, 5 weeks or so. I'm going to purchase an at-the-money 140 strike call on the weekly options that expire on January 31st, which have 38 days to go. I then sell the 155 strike call in opposition to it, since I want to reduce some of the risk associated with that long call position. This is a bullish call vertical that is $15 wide and pays about a $5.50 debit on it, or perhaps a little bit more, like $5.70. You will bear the risk of the debit you make. For the following 5 weeks or so, your break-even point is $145.50. The current share price is only around 3% higher than that break-even point. It would only be around 10% higher than the present share price if it did reach 155. Therefore, you can enter this bullish position at a lower price by watching for moderate movement to the upside where it grinds higher and that low implied volatility. Okay, not asking for much, Just a slight increase in Nvidia's performance back into the 140s. By the end of next month, that shouldn't be too much to ask for, right? 38 days until January 31st. How drastically different are Tesla and Nvidia, Melissa, in terms of how transparent their earnings are based on visible alpha consensus? To use your guy's term, the Cybertruck is, in my opinion, the most important story here for Tesla. There has been much debate over whether or not the predicted threefold increase in Cybertruck numbers will serve as a spark for the upcoming year. I believe that's something we're looking into. Whoa, Cybertruck is so important. We hear a lot of talk about robots. All of that seems too futuristic. Will the Cybertruck have a significant impact on existing sales? And that's what the data show me. It's possible that a product category is about to make a breakthrough when you observe a number that is practically tripling year over year from a relatively low foundation. Well, it appears that people have reacted favorably to the truck. Do you think that robot values and such are real? People are saying that, and Elon is predicting that in the future, each person will have 2 androids. To what extent is all of that hype? Having a robot or someone else, clean up after the holidays and take care of some of my holiday shopping would be fantastic. I've been quite busy this holiday season because of it. Yes, it is true. Elon, let's move quickly. That shopping bot, please. Regards, Melissa. Thank you. I'm grateful, Tom. Describe the Tesla possibilities for me. The flip-flop indicates that volatility levels are actually high, despite the fact that the stock is moving. It's up more than 4% today, for some reason, yet it keeps pushing forward. Even if the stock is growing, they are also rising. Therefore, that gives me buffers on this one, and may lead to certain option strategies that are a little more conservative. Just behind the all-time highs we reached last week, the stock has risen over 80% so far this year. Therefore, I would like to capitalize on the increased implied volatility. Selling a put vertical to profit from a neutral to positive posture could be a strategy to play it to the downside if you're still bullish on this name. I sold the 420 put out of the money to the downside during the January monthly cycle here at Tesla. I subsequently bought the 400 strike put because I want to maintain my risk tolerance in a company like Tesla. I have a $7 credit on this, which is where it was trading before, so this is a $20 wide short put vertical that is neutral to bullish and collecting. Right now, it's most likely trading closer to $6. However, you can use that credit to earn money in this role. Getting a $7 credit on a deal like this lowers my break-even point to $413, which is almost 7% less than the share price right now. In this case, you make money in 3 of the 4 situations. You preserve that credit as the stock continues to rise. You retain the credit, and the stock remains in its current position. You can make money on this bet even while the stock declines but stays above the $413 break-even point. Tell me if you require any other adjustments.